What's up, guys? Welcome back to DCA. So in the last video, we talked about why it is that the market could potentially be forming the basis that eventually leads us into our next bull market. We talked about the short-term holder cost basis, and we showed why this metric is what you're seeing when you talk about the 20-week moving average. When we talk about the 20-week moving average, that's just a retrospective data point. What we want to know is where short-term holders own this asset. And today I'm going to show you specifically why that is, and I'm going to show you further evidence to suggest that the market bottom may have been put in. We could potentially go back and test the low that we made in November, but why structural changes in the holders of this asset have occurred, and why I believe that we could currently be forming the groundwork in order to lead us into our next bull market. So if you guys are new here, my name is Jay, and what we do on this channel is data-driven analysis of the cryptocurrency market. I've actually just released a website with the guys over at Upside Down Data. If you haven't seen their YouTube channel yet, I highly suggest you go check them out. They're one of the most underrated channels on all of YouTube. I'll leave a link to them in the description below. On our website, we have a wide range of price tracking information with quality that you would expect to find on a site like CoinMarketCap or CoinGecko. It's completely customizable. Now, we offer metrics which a short-term holder, a swing trader, or even a long-term investor can utilize in order to improve their market timing. We offer a workbench tool which allows you, without requiring coding knowledge, can create your own metrics. This is all available for free over at polaritydigital.io. So if you guys like this type of content, no hype, no hopium, just pure data-driven analysis, which helps you understand these markets, hit like and subscribe. And with that said, guys, let's do it. Okay, so like we said in this last video, we showed why short-term holders are so important to these markets. When this is green, this indicates that the price is above the short-term holder cost basis. We are above this during the entire bull run. Then we are below it the entire bear market, okay? And right when we cross above it, again here, that's where we head into the eventual next bull run. Now we cross below right here before it kind of crashes, and again below right before it crashes. But then right after that, what happens? Right here at around 7,600, we go above it, and yes, we're on our way into the next bull run. So this is an extremely powerful metric, okay? It is an extremely powerful metric. I think it's one of the most underutilized in the space. Now you'll see that right here, right at around 18K, yet again, we crossed above this short-term holder cost basis. I also want to talk about that other side of the coin, because we have these short-term holders that kind of create the market swings either to the upside or the downside, but we have long-term holders also, which create the long-term stability in the market. And we're going to talk about the dynamic between these short-term holders and the long-term holders, and how it is that when things become reversed between these two cohorts of investors, that is a very strong indication that you may be approaching the market bottom. There are different types of evidence in a market. So there's primary evidence in a market, and then there's secondary evidence in a market. Secondary evidence, I think of things as like the 20-week moving average. It's good to use, it's good to utilize, but it's not a direct reflection of anything other than just a simple retrospective look back at a prior 20 weeks of the price history. When we look at things like the short-term holder cost basis and the long-term holder cost basis, this is primary evidence. This is telling us exactly what investors are doing and what their behaviors are. And we can actually look at this on a day-to-day basis and see who is selling, where's it coming from, where's the selling coming from. We're kind of going to dive into these dynamics today. If you truly understand these dynamics, it's simple. It's really simple information. You will always have a pulse on what's going on in the market. Okay, so what we're looking at here is the number of Bitcoin that were sold yesterday and where they were sold from. When you look right here, you can see that right at around 22,500, there were 80,000 Bitcoin sold. And that means that those Bitcoin were bought at 22,500, not that they were sold at a price of 22,500. Because if you look right above it at around 23.5 up to around 24K, there were 15,000 Bitcoin sold. So that means that those were bought at between 23.5 and 24K. And then you can go below it and see that some Bitcoin were sold at around 21K, some Bitcoin were sold at around 17K. Now, importantly, notice above us, go all the way up from 30K, all the way up to 60K and then beyond, and go below us. Notice there's almost nothing there. There are about maybe 1,000 Bitcoin sold at around 30,500, maybe around 500 Bitcoin sold at around 44,000, 45,000 or so. And then just a handful of Bitcoin sold all the way up in these zones. So these are people that have likely been holding for quite some time. These guys right here, they've been holding for quite some time and now they've capitulated. And we kind of always talk about this is likely the type of investor you don't want to be. Are the guys, now that we're at 25K, you know, you're already down 50% and you're selling and you've been, you know, especially if you're one of these guys who've been holding since 55K, 54K, these guys are long-term holders and they're now capitulating. They're finally capitulating at around a 50% loss. Okay. So importantly though, we see who are the people selling, and they're almost all short-term holders, right? And so short-term holders, like we said back on this chart here, are the guys forming the areas of support and resistance kind of in these wild upswings. And then during the stages of the bear market where we're trying to rally above, we're trying to go on and get above. They tend to be these guys, these short-term holders kind of prevent that because they are forming areas of resistance as you go up. Now, what do you need to get the market rallying? It's typically going to be a large number of short-term holders who are willing to buy at higher prices because these guys are highly price sensitive. So as the price starts to rally, what we are seeing right now is these short-term holders are selling. Some of them are selling. Now, we can make this better though, because when we said that a lot of coins were sold yesterday at 23K, right in that zone, right in this zone here, that's because the price is there right now. Anytime the price is at any level, let's say the price were at 40K right now. If the price were at 40K, the chart would look something very similar to what you're seeing right now. And that's because volume on any given day is highly centered around extremely short-term investors. These people are in and they're out, they're moving it onto a different exchange. There's arbitrage going on. So a huge number of Bitcoin every single day is going to be traded right at the price you're at. So what we can do then is let's just remove that. We don't care about that. So you see there's a gap right here. There's actually a gap right at around 23K. So all we've done is remove that price point. So now we can zoom in and see what's actually going on. That huge number of Bitcoin right there at that level that we're at, that doesn't tell us anything. So this is giving us much better of a view of what's exactly happening as we're kind of sitting around here right now. And you can see that one of the things we discussed on the last video was the fact that where is our sell pressure going to come from? And if you recall, there are over 1 million coins owned right down here in this level. So there are 1 million coins, almost 1.3 million coins owned right at around this 17K level. And we said that as we go up, you're going to see that that is a level of sell pressure for us. Think about this. If there are approximately 1.3 million coins at a level and you only see about 10,000 were sold yesterday, well, that means you're not seeing these people selling in mass right now. And that's a generally positive sign. The people that bought down at 17K are not selling the asset in huge numbers right now. You know, typically if we've gone up 40% in a bear market rally, I would have expected more of these coins to be sold up at these levels. The fact that we are sitting at around 45% above this level at which 1.3 million coins are sitting, and we've only seen less than 1% of these being sold on a day where the market was showing a little weakness. The fact that we've seen this market kind of coming down some, and we're seeing less than 1% of these coins are being sold per day, that is a bullish sign to me in and of itself, even if we didn't have the other data telling us that we've crossed above the short-term holder cost basis and appear to potentially be in an uptrend. I just kind of wanted to lay this out for you and show you where the selling is occurring at. And you'll see, one other positive sign. We're not seeing a lot of capitulation from these people that have become long-term holders up in these zones. Now, these guys are sitting at huge losses, and you would expect that we would see that as we start to come up. They're up 40% from where they were, and we haven't seen many of them sell. And when you look at what's above us, as we showed in a few videos back, there is not a lot of resistance above where we're heading. So when we break above this 30K level, there's a little bit of resistance at 24K and then a little bit at 30, 31, 32. But notice these 30K guys, they've been selling, okay? So they're the only ones selling from these people that have essentially become long-term holders. It's only these 30K guys. So when we finally do break above that 24K level and the market is showing a little bit of strength, I think you're going to see this market just rocket through some of these levels because there's simply no overhead resistance there. All right. Now, like I said, these guys holding at 17.5, we're going to have to see how that plays out because they do own 1.3 million coins. There are a huge number of coins just sitting there. And, if it is an institutional type investor who has a long-term vision, that's a very positive sign. But if it's, a collection of short-term holders that are just going to sell the second we get to 25K or something like that, then we may hit more resistance as we're starting to come up. So we'll have to see how that plays out, but we will be watching it. Now, what I want to show you today is coming back to this chart. Now, what we're going to do is remove the short-term holders here, and we're going to add this. This is the long-term holder cost basis. And this is one of the metrics that highly suggests to me that we very well could be at the bottom. And why is this? Let's look at the places where the price has fallen below the long-term holder cost basis. What has happened though, each time that the short-term holder cost basis has been lower than the long-term holder cost basis? And I want you to think about the magnitude of what this means. This means that on average, if you were a long-term holder, now we're talking about all long-term holders, anyone who has bought 150 days or earlier, on average, back here when we were below this level, and this is something, this isn't breaking news. This isn't something I'm telling you right now because people are talking about it at the moment. This is a point that I have been discussing on this channel. I've probably made 30 videos on this fact, saying that when we go below the long-term holder cost basis, that is a very strong indication that the market is gearing up for its next recovery. Because think about the impact of what this means. If you're a long-term holder, the entire collection of long-term holders own Bitcoin at a price higher than short-term holders. Some guy who just bought Bitcoin a few days ago has a better cost basis than the entire collection of long-term holders. Okay, so this is where the market has essentially created a structural shift. And each time that we see this happen, it's only happened, let's count them. Let's see how many times this has happened. 1 time, 2 times, 3 times. This only happens at points of absolute market chaos. It happens at points in time where the market has completely reversed on itself. And that's what we see because long-term holders very likely are not going to sell at their cost basis. These are guys that have been holding for years at this point. They're not going, they've been around the block. They know what's up, or they've been holding since some of these higher levels because some of these guys who bought all through 2021, these guys are long-term holders also. So these guys know what's up. They know, they're not idiots. They just look back at a chart here and they say, hey, would I have liked to buy Bitcoin somewhere in this range? Because these are all long-term holders, right? As we're in this market rally. Would it have been bad to buy Bitcoin in this range? And they look at it and they go, no, it wouldn't. And that's exactly where we're at now. These guys are long-term holders. They bought in the bull market. They got caught out. They made a mistake, but they realized that, hey, if you make a mistake, what's the best way to rectify it? It's not to capitulate. It's not to take a huge loss. It's to sit back and wait for the next market rally, because there were lots of guys who bought at 10K. If you bought Bitcoin back here at 10K, or let's say you bought Bitcoin at 11K, right at this peak here, you thought, hey, the market rally is coming back because some guy on YouTube told me so. Well, you were down 72% from there. But what happened if you just held out and you just held and then you started using the DCA index? Well, you sold up here. Well, you actually would have probably sold right around there. You sold at a 400% profit. You shifted it into Ethereum and then you doubled, tripled that yet again. Okay. What we see is that long-term holders form the floor for the price. When these long-term holders buy in, there can be times where we are below their average price, because imagine when you're at this level, there still may be some capitulation, because not all long-term holders are created equal. And this is another thing that I'm collecting this data now. I'm going to be able to further delineate this. So I'm going to be showing you guys where the cost basis of each individual range is, not just all long-term holders, which are defined as anyone holding greater than 150 days. So what I want you to remember is long-term holders also include these guys. As we showed right here, some of these guys are still capitulating. Not many, but a lot of them already have. There aren't a ton of them left. So what we're saying is, when we get below these guys' price, when we get below this long-term holder cost basis, it's very likely that there's not going to be much selling left, because we've shaken out all the short-term holders. We've essentially left ourselves where all we have left are long-term holders and day traders. And day traders are always going to be there at every single price. That's never going to go away. So we're always going to have a lot of short-term holders. So what that means is we may not immediately start going up, but we've essentially wiped out the market of all of its major capitulation risks. So if you just look back here, so we're looking from December all the way through October. This took nearly a year before we started going up again. We kind of traded right in this range. There was some up, there was some down, there was some up, there was some down. But eventually, because we've shaken out all the short-term holders and all of the long-term holders who lack conviction, all you're left with are these long-term holders. And yet again, we see the same thing here. Notice the long-term holder cost basis. It comes up, we fall below it, and how long does it take? Again, it's not an overnight thing. Here, we don't really get above it for about a half a year. And let's see where we're at now. So we were kind of playing around right at this long-term holder cost basis, and we've been there for about a half a year. So let's assume that, let's assume this kind of plays out again. And, suppose that we fall below this long-term holder cost basis again, which is entirely possible. And, I don't think it's not that meaningful if we do. We haven't really gone that far above it. It's not like we've cleared it and are just off to the races now. So it's entirely possible because, if you look, this long-term holder cost basis is right at around 20K and we're sitting at 22.5. That's not like we're, extraordinarily high above it. So this could, like we've seen in the past, take something like a year. It could take a year and a half. But importantly, when you look at these metrics together, we are forming numerous structural confluences that suggest the market has essentially removed all of its major capitulation risks. Now, like we said, there are still institutions out there, like, we know DCGs out there, things like that still do present a risk to this market. And so we could potentially still see downside risk from here. But I think the days of seeing the price absolutely break down in this type of collapse have kind of come to a halt. Now we've seen the structural shift. And remember, this isn't price technical analysis. This is actually showing us the holders. These are the actual holders of Bitcoin. And we know based on history what their behaviors are. So this is type A evidence. This is direct evidence that we can witness in the market about investor behavior. And that's why this is so important and suggestive to me that even if we're not at the bottom, the groundwork is being laid in order to put us into the position where we can move towards the next bull market. Now, we could go lower. Please listen to this because, I feel like people hear one point about every video and they don't hear anything else. There is still downside risk in the market. We're simply in a place where the market can now begin towards its next bull market when conditions become favorable. I'm going to repeat that. The market can go lower, but when conditions become favorable, the market can and very likely will move towards its next bull market and then eventual all-time highs. So that's going to be it for this one, guys. Until next time, as usual, see you.